IREN heads into the weekend under heavy scrutiny, but with one surprising new development that's turning heads. A major hedge fund quietly disclosed a large position in the company. And even though the stock has been grinding lower for several sessions, this institutional buying has raised a fresh question. Is the smart money stepping in, or is this simply a high-risk, high-conviction gamble that won't be enough to turn the tide? That's the tension at the center of the IREN story this weekend, and tonight we're unpacking exactly what it means. To understand this moment, you have to recognize the backdrop. IREN has just finished one of the most volatile stretches in its trading history. In early November, the stock surged to $76, fueled by the now famous Microsoft deal. Investors believed this was the moment IREN vaulted from a former Bitcoin mining company into one of the most promising AI infrastructure players in the world. That contract, worth up to $9.7 billion over 5 years, was viewed by many as the equivalent of a golden stamp of legitimacy. It suggested that a hyperscaler, one of the biggest in the world, trusted IREN to help build out next-generation compute capacity. But almost immediately after those highs, the stock began pulling back. Earnings came out and revealed a more complicated story beneath the surface. Yes, revenue was strong. Yes, the direction of the business is clearly aligned with long-term AI demand. But the numbers also showed the early pains of becoming an AI infrastructure company. Capital expenditure rising. Depreciation rising. Free cash flow under pressure. Margin timing uncertain. And perhaps most importantly, execution timelines for the massive Microsoft deal still unclear. For a stock that had priced in years of perfect execution, that uncertainty was enough to send traders running. Over the following days, IREN dropped sharply, breaking below support levels, triggering technical selling, and losing nearly half its value from the highs. Sentiment soured fast. Analysts called the valuation stretched. Short sellers gained confidence. Options activity turned bearish. And retail investors who had bought into the hype began to question whether the story had been overplayed. That brings us into this weekend, where a new twist emerged. A hedge fund called Situational Awareness LP disclosed a position of approximately $338 million in IREN stock in a regulatory filing. That number is large. It means they weren't dabbling. They weren't testing. They were making a statement-sized bet. In the world of institutional trading, that kind of size is significant. It triggers analysis. It creates curiosity. And it forces investors to ask the obvious question: what do they see that others are missing? It's important to understand the psychology behind this. When a stock drops nearly 50% in a short period of time, people expect to see fear, capitulation, panic. But what often goes unnoticed is that some of the biggest players in the market wait for exactly that moment. While retail investors are exhausted and sentiment is at its lowest, institutions sometimes step in, not because the stock is safe, but because the long-term opportunity outweighs the short-term volatility. They don't care about the next 24 hours. They care about the next 3 to 5 years. So the disclosure of a large hedge fund position doesn't fix anything, but it changes the tone of the conversation. It suggests that not everyone is running away. Someone, somewhere, is leaning into the chaos. And that's what makes this weekend so interesting. But the fund's position disclosure is only half the story. Across the financial media this weekend, a new round of analysis emerged from outlets that had previously sat on the sidelines. One article argued that IREN regains momentum and laid out a fresh bullish case centered on the Microsoft contract, IREN's renewable energy capacity, and projected earnings growth over the coming years. This type of coverage tends to appear when the extremes of fear reach their peak. It's the early stage of a sentiment reset, when contrarian analysts begin looking beyond the immediate damage and toward what the next cycle could look like. Still, that optimistic framing has been challenged. Other analysts remain cautious, highlighting the core issues that triggered the sell-off in the first place. They point to the capital intensity of building AI infrastructure at scale. They point to dilution risk and the amount of funding required to expand GPU capacity. They highlight competitors with stronger balance sheets. And they question how quickly IREN can actually convert its Microsoft partnership into meaningful revenue and margin growth. So on one side, you have a long-term bullish thesis, backed by new institutional interest and media narratives looking forward. And on the other side, you have very real execution challenges, very real risks, and a near-term environment where sentiment is still negative. This is where the story becomes compelling, because both sides are right. IREN is absolutely in a high-risk phase. No one can deny that converting a $9 billion contract into sustainable earnings requires flawless execution, precise timing, and significant capital investment. But at the same time, the long-term opportunity is just as real. Demand for AI compute is growing exponentially. Hyperscalers are racing to secure GPU capacity, and the companies that manage to build and operate scalable AI infrastructure are likely to see explosive multi-year revenue streams. That's why this weekend feels like a turning point, not because the stock has bottomed, but because the narrative is shifting from panic to evaluation. The emotional selling that dominated the past 2 weeks appears to be slowing. Now the conversation is becoming more balanced. Investors are reassessing. Analysts are distancing price from hype and replacing it with data. And institutions are revealing positions that indicate confidence in the long-term thesis. So what's the right way to frame this in a video? The angle that captures all of this is simple. Institutional buying has arrived, but can it save the stock? It's the perfect way to center the question without pushing certainty. Because the truth is, no single hedge fund can save a stock. Buyers don't guarantee a turnaround. But the presence of institutional conviction at this stage of the cycle tells you that big players believe this is not the end of IREN, it's the storm before the development phase. From here, the story becomes all about milestones and signals. Investors want proof that GPU deployments are underway. They want clarity on how quickly Microsoft revenue will flow. They want updates on data center construction. And they want reassurance that capital requirements for expansion are manageable. If IREN begins delivering those updates, sentiment will shift fast. If they remain silent, the uncertainty will continue. Looking ahead to next week, watch not only the price, but the behavior. Does volume increase on green days? Does the stock show relative strength when the market dips? Does the selling pressure ease? These small clues often show changes in sentiment long before headlines catch up. The bottom line is this: IREN is at a fascinating crossroads. A massive institutional buyer just stepped in. New bullish narratives are emerging. But the risks that caused the slide haven't magically disappeared. It's a rare moment where hope and caution collide, and where investors must decide whether this decline represents danger or opportunity. And that's what makes this weekend one of the most intriguing moments in the entire IREN story so far.